Hey everyone, welcome to today's Explainer. Today, we're tackling one simple but honestly absolutely crucial question for any beginner investor out there. What exactly is a Demat account? So, here's a kind of fascinating question to kick things off. Let's say you decide to start investing and you buy a stock today. Where does that stock actually go? I mean, back in the day, if you bought 100 shares of a company, they would literally mail you this fancy physical paper certificate covered in stamps and signatures just to prove you owned it. Can you imagine the absolute mountains of paperwork? It was a mess. But today, obviously, you don't receive a paper certificate in the mail. Everything has gone digital. So how do you actually prove you own a piece of that company? Well, the answer lies entirely in a Demat account. Okay, let's dive into this. Demat is really just short for dematerialized. You see, before 1996 in India, the stock market relied 100% on physical paper. And as you can probably guess, this created massive headaches. Paper certificates got lost in the mail, they got stolen, damaged in fires, or even forged. Plus, transferring shares took weeks or sometimes even months. So to fix this whole nightmare, the system was dematerialized. Basically, physical certificates were converted into highly secure electronic records. So simply put, a Demat account is an electronic account that holds your shares and other securities in a purely digital format. To make this incredibly simple, just think of a Demat account as a super secure digital locker for your investments. You're already very familiar with how a bank account works, right? Your savings account holds your cash electronically. You don't have physical dollar bills or rupees actually sitting inside your phone, but you know for sure the money is there. Well, a Demat account does the exact same thing, but instead of holding your cash, it safely holds your investments. And this brilliantly illustrates one of the biggest points of confusion for beginners. People mix up a Demat account with a trading account all the time. But to invest in the stock market, you actually use an ecosystem of 3 accounts working together seamlessly. First, you have your bank account. Think of this as your wallet, holding your money. Second, you have your trading account. Now this holds nothing, it's just the gateway, kind of like a shop counter where you actually place your buy and sell orders. Finally, you have the Demat account. This is your digital locker. Once you buy something at that shop counter, it gets stored safely in your locker. Now today, most stockbrokers open both the trading and Demat accounts together for you in one single application, which is exactly why people often confuse the two. It's walks step by step through exactly what happens in a real-world scenario. Say you decide you want to buy some shares. Step 1, you open your 2-in-1 trading and Demat account. Step 2, you open your broker's app on your phone and you place a buy order for, let's say, 10 shares of a company using your trading account. The money for that purchase is instantly deducted from your linked bank account. Step 3 is the trade settlement. Under the modern T+1 settlement system, just 1 working day after your trade, those 10 shares are automatically credited into your Demat account. Boom, they're yours. And step 4, when you eventually decide to sell, the whole thing just runs in reverse. The shares are debited from your Demat locker and the cash is sent right back to your bank account. Now, I'm going to let you in at a little behind-the-scenes secret here. When you open a Demat account with a stockbroker, your broker does not actually hold your shares. Nope. Your shares are stored safely in a massive central depository. In India, for example, there are 2 main ones, NSDL and CDSL. Think of them as the ultimate, heavily guarded electronic vaults regulated directly by the government. Your broker is just what we call a depository participant, or a DP. They act as the bridge between you and that giant vault. Why does this matter? Because it gives you absolute peace of mind. Even if your specific broker goes completely out of business or shuts down, your shares remain 100% safe in your name at the central depository. But wait, it gets better. Because a Demat account is incredibly versatile. It's not just for holding shares of big companies. It acts as this ultimate all-in-one storage solution for a ton of different financial instruments. You can store your mutual funds in there, exchange-traded funds, corporate bonds, and even government securities. Having one single Demat account allows you to view your entire diverse investment portfolio in one clean, consolidated electronic statement. It's super handy. So, why is this whole system such a massive game changer compared to the old paper days? Well, first and foremost, total safety. There is literally zero risk of your certificates being destroyed in a flood or forged by a scammer. Second, instant transfers. What used to take weeks of mailing documents with signature verifications now settles in just one single working day. Third, and honestly this is a favorite for a lot of investors, automatic benefits. When a company you own pays out dividends, issues bonus shares, or does a stock split, you do absolutely nothing. No paperwork, it is completely hands-off and automatically credited right to your account. And finally, convenience. You can just pull out your phone while waiting for a coffee and see your exact net worth and holdings in real time. All right, let's pause for a quick interactive knowledge check. I want to see if you're tracking with me. Let's say you just logged onto your app and bought 20 shares of your favorite company. Where do those 20 shares permanently sit after the purchase is completely finalized? Do they sit in your bank account, your trading account, or your Demat account? Think back to the digital locker analogy we talked about earlier. Drop your answer down in the comments right now. No cheating. I'd really love to see how many of you got this distinction right. So the crucial point to take away from all this is that the financial ecosystem is brilliantly designed to keep your assets safe and separate. Demat simply stands for dematerialized. It's the secure electronic locker holding your actual investments. The trading account is just the gateway or the shop counter you use to place your buy and sell orders, and your bank account handles the actual cash. Together, these three accounts form a seamless system that allows you to participate safely, quickly, and confidently in the financial markets. And that pretty much wraps up our overview. If this explainer finally made the whole Demat concept click for you, do me a huge favor and hit that like button and subscribe so you never miss our structured deep dives. And don't forget to put your answer to our quiz down in the comments. It really leaves you wondering, though, if stocks and bonds are now just lines of code in a digital locker, what physical assets will be dematerialized next? Real estate? Fine art? Let me know what you think, and tell me what complex stock market topic we should explain next. Keep learning, stay focused, and I'll see you in the next explainer.